Hey everyone, welcome to another edition of Trading Bitcoin with your host, Tone Vace. I think this is going to be an excellent show, completely not pre-planned. Thank God the parties are over. This is it. Consensus is done. Yesterday was the last day. Shout out to Blockstream, Dragon Energy Night Part 2, sorry, second annual Dragon Energy Night went awesome last night. It was a lot of fun. And today, right after the show, I am going straight to the Wall Street Bathhouse. Anyone is welcome, subject to venue, costs, fees, availability. Thursday is usually a quiet day. Wednesday, Thursday are quiet days over there. And I will be heading there by noon. It opens at 11. Need some time for them to heat up. And I'll be there all day. So as long as that people are coming and hanging out and having some of the best food downtown Manhattan, yeah, come down. They have alcohol. I usually don't drink in there. The last thing I need is another drink too. Uh, but uh, but yeah, come down. So we got a great show today, guys. We got Tyler and we got Van Zen. I was able to get him last minute. Tyler, you've been taking somewhere. I want to say you've been taking jabs on Twitter, but it's more like straight up Mike Tyson, hooks and roundhouses. So I want to talk about that. I actually watched this morning, I actually finished your last video from yesterday, I think, and it was
Yeah.
very, very good. And Van Zen, a little warm over there in Thailand. What's going on? Are you muted?
Yeah, he's muted.
All right, all right. Well,
I was
There
about
you
to
go.
say that it's so hot, I can't stop sweating. There's no shirt light enough to wear in this weather. So thanks for letting me come on in the
I'm
nude. Thank
I'm
you.
saving mine. I actually haven't like it looks like I'm back to wearing buy the dip, but but yeah. So we'll talk about the buy the dip strategy on the show, and also I'm saving my shirtless days for the cruise a month from now. I should also probably
Mm.
start working out again. I have 1 month to get in shape for the cruise.
Hey,
All right, guys.
Ben Zen, do you have your turquoise thong on right now?
Yeah.
That. How did you know?
All right. So let's go to the screen share. We're going straight to the charts. Had a little bit of an intro. We got 500. We had about 600 viewers, which should increase. Real quick, guys, as usual, my workshops. We are moving to the webinar model. I'm thinking about what the next webinar is going to be. I'm probably going to do a Twitter poll as to what the next webinar should be. I did a Twitter poll last time. TD Sequential won. I really want to do a risk management. I want to do entries, stop losses, and exits. But I'm still kind of doing in-person ones. Amsterdam was moved to Saturday. We got very low engagement on Friday, and had no choice, had to move it to Saturday in Amsterdam, June 8th. Then I believe on Sunday probably or Saturday, June 16th. It looks like Sunday, June 16th in Berlin, and then taking a month off from workshops, and then Dallas. Tyler, I heard you're gonna do another one. That sounds very, very interesting. My calendar again. Go to the calendar and come out today. I already talked about it. The Wall Street Bathhouse affiliates. If you want to support, go to affiliates. All right, enough of that. Let's you know what? I want to do the S&P first. I want to do the S&P real quick. I want to take a look at Lyft. Another look at Lyft right here. Man, I just can't get my entry. So Lyft has pulled back to the area of the breakdown, and it's and into the moving average that recently came about. That's the 20 moving average. I am praying for a rejection here and new lows. Now, that could be tricky because way too many people are short Lyft. So did they cover in the last few days? I don't know. But I'm not gonna chase Lyft. So I'm praying for a pullback in Lyft, breaking this low, and I actually I'm gonna get another price flip. I never got my 9, never got my sub 40 entry. So I'm gonna wait. I'm gonna stay patient and I'm gonna wait. Uber is of course rising, but it's very correlated with the market. So let's just jump right over to the market real quick. And here is the weekly. The weekly market is still in a bearish posture. We have a red 2 that traded below the red 1. Yes, we are in a countdown phase, and that is important. Also, from a fundamental view, I didn't expect us to break 3,000 this year. So I kind of want to be right on that. As long as we stay above the blue line, I believe we're okay. So we got to hold 2750. On a daily scale, on the S&P, we ended up bouncing right off of the setup trend line. I did not have a good trade to offer to myself or to the people that are following me, because if only this 7 candle was a 9 candle, I would have been all over screaming buy, but it wasn't a 9 candle, so I never got my great entry off the pullback. We are on a 9 now. It is not perfected. It has already moved quite a bit. And I usually yell at people for doing what I'm about to do, but if this turns later this week, it is one hell of a head and shoulders pattern right at the top, with this being the left shoulder. But we first have to turn. Do not assume we're going to turn. My biggest pet peeve with head and shoulders artists is that they start to turn the right shoulder down before it actually does it. So you wait. You have to wait. Let's see how today ends. Let's see how the whole China thing plays out. And you have two choices here. You wait for the prices to go back above 2,900, and then you can buy in with the anticipation of breaking 3,000 this year, or you do have a setup trend line that's forming right there at 2,950. Or you wait for the turn, and then we could go down quite a bit, actually. That would also set up my lift play. All right, that's just my overall stock market view. Tyler, any comments on this before we go to Bitcoin?
Yeah, just a couple of things. Number one, very important what Tone just said about trying to front run a Head and Shoulders. If you look back on March the 19th and 20th, we had a similar thing going on where that 9, which was a green 9, could have been ahead on a Head and Shoulders. No, the one to the right. Yeah, right there. And if we had rolled over into another shoulder coming off of that 9, we could have formed a Head and Shoulders going down much lower. It did not. We held right at the top of Tone's channel and then went much, much higher after that. A similar thing could happen here. The difference between the two is we are now coming off of a red 9 as opposed back then when we were coming off of a green 9. So the potential is that if we can hold in this area this week, we can go up much higher. And so I would not front run a guess on a Head and Shoulders.
Now let's get something out of it. I am a huge bull of the S&P 500. I just think the S&P 500 went up a little too far and a little too much. And on a daily scale, it's a good bounce. Like, look, we have not broken a single setup trend line the entire way up. This is now the 4th setup trend line on the way up. We did not break. Now, if you look at it, if you look at this run, we did break one setup trend line, even though not much materialized from it. I'm trying to find another example of premature Head and Shoulders ideas, but it's okay. Let's just move on. Quick glance at the euro rate since I have it up. Man, like
Tone, just a second. Never mind bringing the chart back. I just wanted to say I'm looking at the Nasdaq right now, and it's kind of correlated with S&P, isn't it? And it's advancing very strongly. It's at 7565. If it closes above 7600, there's no chance of a Head and Shoulder because the moving averages will pull into a bullish alignment again.
Yeah, no, that sounds very, very plausible, actually. Hey, hi, Leah. You are in the chat. Feel free to join. Um, okay, nothing really interesting. Like if there's this massive setup trend line on the euro dollar at like 111 on the weekly. If that thing breaks, the euro, just put a fork in the euro. It is absolutely done. Silver.
Silver's
Well,
down and gold is down today.
I'm not surprised, and I've been a big bear. I mean, like people aren't making fun of me for gold and silver as much as they used to back in the day. I've been a bear on gold and silver. Like people say, Tone's been a bear on Bitcoin since the day he got into Bitcoin. That's not true. But like since the day I started YouTubing, but I've been a bear on gold and silver since before I started YouTubing. That has not changed. I've been a bear on gold and silver since 2013, pretty much when I got my first Bitcoin, and I remain a bear today, and I still think we'll probably go to new lows, but unless we can break the Fibonacci line. Anyway, Bitcoin time. So we're back to the time analysis, and man, hey Vincent, how late is it over there? It's pretty late, right? It's only like 10 p.m.
No, it's not. It's 9 o'clock. 9 o'clock.
Okay, great. So okay, I don't even know where to start. Like, do we want to talk about the long picture? Do we want to talk about the short picture? Let's talk about the long picture. And Vincent, so your scenario that you described on our epic, is the bottom in podcast, you said the bull trap. You said I was too pessimistic on my bull trap being 5,000. You were looking for a bull trap in the $10,000 area and beyond. Tell us more about it.
Um, it's just the pattern, like we had in 2014 and 15, not 15, 2014, when we had that in the middle of the rally, or in the middle of the bear market, we had that rally that just kept going. It was insane. It didn't pull back. It would kind of form these flat corrections and then just keep going.
It was actually one of my worst calls back then. This one here was the Triple M Ponzi scheme.
Yeah. And that's actually advanced what you're showing there, because look, it's coming off of a bottom, right? And I don't think that we're coming off of a bottom. That's the difference. I think that we're in this 2014 kind of scenario where the market goes into a denial and they just run, they do a bear market rally, which would be Tyler's hyperwave number 6. Am I right, Tyler? And it kind of pulls up, but that's prior to the final low. I'm not sure how this is going to unfold, but right now I'm still thinking it's a bull trap, and it's so energetic that it can only be. It's going to suddenly reverse and wipe everyone out.
Yeah, well, Vincent, this can't be, and I've seen this before. People are telling me that the current rally might be hyperwaves wave 6. That's actually impossible. Wave 6, from my understanding of hyperwave, Tyler's the expert here, has to happen very, very soon after the ultimate high. And like wave 6, if wave 6, like a year ago was the time limit, well, like wave 6 has to happen within a month of the all-time high.
All right, so that's probably the time when you and I were talking just after that bull trap from the top. We were watching that, right, and saying, well, that was a 6. I think so.
Yeah, that's exactly right. It's very clear. We did a 1, 2, 3, 4, 5, 6, and a 7, and the only question is the 7 finished yet? And I still don't believe that it is. But the price can go anywhere it wants as long as it doesn't go back to the old highs. If we start down at any point from here on up to 10,000, 12,000, 14,000, we can still go all the way back down and it's still the same hyperwave. It's way too early to make that call, but there's nothing that is going on right now up at 8,500 or 9,000 or 9,500 that has anything to do with the structure of the hyperwave. So, and I go into a lot of detail in last night's vlog about that. I'm using another system, and that's why I bought in above the 6,000 level, and that's the Consensio system. We can talk about that later. But what Vinzen's saying is very important, which is from top to bottom, from the bottom of a move to the top of a move, almost anything can happen after a parabolic break. And most of those have nothing to do with hyperwave. Hyperwave is a very rare structure. And when it takes place, once you get beyond the 4, 5, and the 6, the 7 can do just about anything it wants. And we point back to Japan, where the 7 took 20 years to finally get down to where it was finally going to go. Maybe this is the bottom. That's a possibility that we've seen the bottom. I don't believe it. If we get a retest like Tone's talking about, down to 6,000, since we're all the way up at 8,400, a drop down to 6,000 is almost a 30% drop, which would almost fall into Tone's 30 to 40% range. But at that point, if it could hold that 6,000 level and then turn back up and go to new highs above 8,500 or 9,000 or wherever, to me, I would be putting more money into Bitcoin at that point, not until then.
Yeah, and I actually just made a bet yesterday. It's not a big bet. I should have bet a steak dinner, but we ended up betting just $100, which is pretty much a good steak dinner. And it will air soon. You'll see where. That I'm looking for. And the bet is, will Bitcoin come back under 4,500 before the halving? And I'm saying that it will.
If it does, then I think it's going a lot lower. I think it needs, for me, it has to hold the 5,800 to 6,300 range. Anything below that, I think it's in very deep trouble again. And I will be completely out of my Bitcoin trades below that level.
For me, it's 4,200. For me, it needs to hold 4,000 to 4,200. And I would actually be buying in under 4,500, but I will get out of that position below 4. So I will look to buy into Bitcoin between 4,000 and 45. Basically, the position that I've been selling this week, I would look to get in between 4,000 and 45. But if we start falling below 38, then I'm out.
Vinzen, what does this discussion have to do with your view where we are right now? If we are turning now,
go ahead, I'm listening.
Yeah, we just dropped $500 last night, back down off that 8,400 kind of double top. Let's just assume for a second that this is as far as this rally goes. What would you be looking for in terms of support below if we are turning down now?
I'm gonna say the thing that the trolls resent, and that's gonna spark them off now. I'm gonna agree with both of you. I'm gonna agree with both of you, because Tyler, you're saying that if it breaks down from here, it could be catastrophic. And Tony, you're saying you're looking at 4,000, you want 4,000 to hold. And you guys know that I'm a moving averages trader because they lag and because they tell me what is already going on, not what is going to happen, but what is actually happening. And look, on your chart, Tone, there's the orange line at the bottom is the 200-week moving average, right?
Yeah.
It's lifting up. It's lifting up towards 4,000, and
Yes.
I expect that to be tested again. If we, and I don't say if we break down, we're gonna break down from some level here, and then we're gonna go back there. It might take weeks or it might take months, but I believe we're going back below 6 because it was cut so easily, and now where is the bottom? I used to say 2,500. I don't see that now. What I'm seeing, if you don't even have to zoom out. I'm seeing a multi-year triangle. Have you guys thought about that?
What kind of triangle? Symmetric?
Yeah, symmetric with a barrier at the top, so that it announces the next breakout level from where everything just goes crazy.
Oh yeah, here's the big question. Here's the big question for you, Vincent. If we do go up into the halving is in May. Do you think it's possible to go sub 3,000 if we end up above 20,000 going into the halving?
No, that would be. I've never seen a picture like that. You know what I mean?
We've never seen Bitcoin either. It's done many things we've never seen in trading.
Yeah. But you're saying that if will it go to first go to 3,000 and then go to 20,000?
No,
or the other way around?
No, Vanda. If we do go on this massive bull run, and the price of Bitcoin like gets to the vicinity, or basically, if we get into the $20,000 per Bitcoin zone before the halving, is it still possible to go sub 3,000 at some point in the future without a catastrophic Bitcoin collapse of the code or whatever?
Oh yeah. Fundamentals aside, assuming the fundamentals are sound and they can remain the same, it would not look right in the chart. That scenario to go to 20,000 and then come sub 3,000, that would just be. It would look broken and sort of retarded, you know.
Tyler, do you think it's possible?
No, I think if we get above approximately 13,500, it's gone to the upside.
Okay.
I don't think 20 is important.
Okay. So Tyler, so your zone, if we can get above 13,000 and sustain it, you have like a 98% chance or 100% chance we're not going sub 3.
Yeah, I am reluctant to use those 90% numbers anymore. It seems like a lot of people don't like those, even though I still believe there's over a 90% chance that we're going to hit 1,000 at some point. But I think if we get above 10,000, 10,000, 11,000, that 12,500 or 400 place, so we close at 13,000, I will be fully in, not with just 20%, but 100% of X on that trip up incrementally as we take out, first of all, 8,500, which we haven't done, take out 9,400 where the Fibonacci is, which we have not done, take out 10,100 and 11,100, which we have not done. But on that road up, as each of those are taken out, that builds the case that my consensio is going to override Bitcoin and hyperwave to the tune that this will be the first time we did not return on a hyperwave back down to 1 or to one of the two funky hyperwaves at 2 or 3. Fine, that's great. But I won't be looking back. I will be fully invested in the bull market in Bitcoin if we take those sequential points out.
Okay, so my other question, and I haven't even given my answers to these, I'm just asking you guys. My other question is, if we don't go above, let's say even 10,000, and we get stuck between 5,000 and 10,000 for the next 9 months going into the halving, do you think it's possible to go sub 3,000 after the halving if we consolidate between 5 and 10K for the next 9 months?
Can I answer first?
That's
I think it's possible because I think it's a good scenario you're sketching, because I think it's possible if the halving does not produce a new high, the market might express their disbelief or dissatisfaction with a sell-off for many months or years, and that would put us in my 2022 bottom, which might be 3,000, although I'm more in favor of a triangle now.
Tyler?
Yeah, that's a very interesting question, because I agree that is possible. I think above 10,000, it becomes less possible, but let's just assume the way you outlined it, a range between something on the 5,000 to 10,000 range for the next 9 months. I think it's very possible to go sub 3,000, or at least to 3,000 after that, if we get up to the halving and we don't get a tremendous positive response. I think that will pop the balloon of an awful lot of people.
Okay, so here's my little take. So as I do my take, I want to explain something, make something very, very clear. I don't know how long you guys have been watching us, but here's the reality of the situation. Tyler never shorts. Oh, first of all, Tyler only trades Bitcoin. So forget about crypto. It's just Bitcoin. Tyler only goes long Bitcoin. So he buys and then he sells. Never shorts. I will take a short when I think there is a 90% chance of my trade succeeding. Okay. And my trade can still fail, but I will take a short when the situation calls for it. So very quick recap. Tyler, my best guess is, Tyler, you literally got out the week after the high. The high came in the week of December 11th. You had sold your long position the week of December 18th.
That's correct.
Okay. And so Tyler has not been long in a Bitcoin trade since he got out a few days after the top. I did not announce a bear. And did you announce a bear market that week too?
Yes, I did. I said that the hyperwave phase 4 was broken. Now, remember, I'm not in, or wasn't in, and haven't been in Bitcoin. I was in GBTC. And as Tone knows,
No Bitcoin to me.
Yeah, the difference is that there was also a hyperwave in GBTC. And the difference is GBTC was trading at 100% premium over Bitcoin. And the reason I was out of that trade was because not only was the price of Bitcoin breaking its hyperwave, but the premium on GBTC had the potential to drop to 0, plus the loss in Bitcoin. So I was hypersensitive to the position I was in, because the premium had gone to 30 up to 100. In other words, a 70% increase going into that high. So I made a lot more money on the premium increase than people that were strictly in Bitcoin. Therefore, I wanted out quickly when Bitcoin broke. But I don't get to make those decisions when I use hyperwave. When the wave is broken by a weekly close below the phase 4 line, I am out. Period. No questions, no matter what Consensio or fundamentals say. And I've been out ever since until last week, where for the first time, I have not yet personally done it, because I've got to get all of my clients in their positions first, because I have fiduciary clients as well as consulting clients. and therefore I can't get a better price than anybody that I'm advising or I'm managing money for. So I'm personally in an awkward position. But other than that, you're correct.
Right. So it's very, very simple for Tyler and but you didn't really have any clients in Bitcoin at this time.
Well,
but
I did. They were all discretionary. So I didn't have to talk with them. I simply did it. I put them into GBTC.
Right. Like because you weren't popular on Twitter or YouTube at that time.
That's right. Lee and I did not start until the beginning of February,
Right.
a month and a half after all that happened.
Right. But if you had a bunch of people, if you had the following that you do now, that would not have, you would have said exactly the same thing, just like I would have.
Exactly.
Okay. So here's the TLDR. Tyler was in a long trade and got out the week right after the top. Okay. I was not in a long trade. I was in a hodl position and I remained in that hodl position. However, I turned bearish and declared this to be a bear market around the week of January 8th. So I didn't declare a bear market at 17,000 like Tyler did. I declared a bear market at around 15,000, which was still pretty damn good. Now, at the time, Tyler and I were both calling for very, depressed lows. My most optimistic low was 5,000. My middle of the road low was 3,000. And my worst case scenario was 13 to 1,500. So I turned bearish at 15,000. Now, if you started watching me in November, that's not my problem. That you should have found me back here, because as long as I turned bullish before 15,000, I was responsible about the bear market, right? That's my point of view. Now, as far as my views on the market, during this bounce from 6,000 to 12,000, I actually turned bullish because of the way we bounced on a daily scale. There was a 9 on a daily scale, creating an awesome buying opportunity off of 6,000. At the time, I also felt that we had a chance to replicate what happened in early 2013, where we dropped 70% in a matter of weeks, then recovered, stabilized, and still went to higher highs that year. So had this bounce off of 6,000 been sustainable, and we would have gone back to that $15,000 area, I would have felt that we're ready to go to 50K in 2018. Now, that didn't happen. The rally faded. The first big trade that I took on was a short at 6,000 right here, because I just could not pass up the opportunity of shorting the descending triangle that I had a 90% confidence on would actually crash. That would have been a profitable trade if not for me being, dumped off the exchange, right? Now, right here with this double bottom, I did not like it. So that's why I still anticipated lower lows. That didn't happen. The next trade I took on was a long trade actually from this area. From this area, I expected a bounce. I took on the long trade. I'm a swing trader. That's another interesting thing, Tyler, that you said. You see, your entries are more position trading. My entries are more swing trading. And that is why, and I want to talk about your position. You went long at 6,800. And for me, that was a risky trade because I'm a swing trader, but you're more of a position trader. I would rather be patient and wait for the pullback. That's because my time horizon on my trades is very different. So I went long over here at 4,000. I cashed it out at 5,000. I tried shorting at 5,400. The trade failed, but made me money. It was a failed trade that was profitable. And I then recommended buying breakouts all the way out as swing trades. And if I zoom in on a daily chart, My swing trade breakout recommendations were, even though I didn't take the trade, was a break of the prior high should take you higher, and the break of 70, 74, 75 should take you all the way close to 9,000. Now that may not happen. This is why you do stop losses. As you look at the daily chart, it beautifully topped on a 9 last night. We top on a 9 daily last night. We also top on a 9 12-hour late last night. And or a little bit earlier than that, just yesterday. The 4-hour topped on a 9. The 1 hour, did not. The 1 hour was not very helpful to you, right? So you had the 4 hour.
The 1 hour is never helpful in a strange way. It's the messiest of all time frames. Yeah.
That may be true, but you had the 4 hour, the 12-hour, the daily all line up with 9s. Now the weekly says there's more upside. So we'll see what happens. Let's see if we get a 1 to 4 day correction, and then we reset and still get into a 9 weekly in that low $9,000 range. But I will still be patient. I'm still waiting for my monster pullback, and I will try to buy that dip. And if that dip is sustainable to the upside, I will then declare the end of the bear market and the low to be in. But if the price turns and starts breaking all of the support levels that we have built in 2019, then we can easily go sub 3,000. And the amount of bullishness in the air and the amount of, I mean, like Ripple just went up 25%. These are not good things. These are not signs of true sustainable recovery like the NASDAQ had for the last 10 years.
Those are great points. The most important thing I think you said, Tone, from my perspective, is that I broke I broke traders down into 3 categories last night: short-term traders, intermediate-term traders, which might be called swing traders, and then long-term investors, which could be called position traders. All 3 of those groups can buy at the same time, but they're not going to sell at the same time. And the difference between the 3 is what all 3 of us constantly talk about, which is called money management. If you are trying to be a short-term trader, then you need short-term indicators, and you're going to make many more trades than an intermediate-term trader. And an intermediate-term trader is going to make many more trades than a long-term position trader. Not that one is better or worse. Everybody has to make their own decision. But what Tone just said about the difference of what he just did on this run-up and why he did it, and what I said in my vlog last night, they are not contradictory things. They are, our objectives are different. We are trying to achieve 2 different things. In my case, I'm going against one of the most powerful tools I've seen, the hyperwave. I'm going against it by using something else that is giving me evidence of something going on that hyperwave does not attempt to describe, which is a large move in a phase 7. And that is not picked up by hyperwave, but what is picked up, or what can pick it up, is this thing called Consensio. At the same time, Consensio said I should be fully in. And fully in to me on Bitcoin is very different than fully in for other people, because I believe, and I said it in our Medium article, that at some point it is possible and maybe even probable that Bitcoin will become the standard currency in the world at some price between $5 million and $10 million of Bitcoin. Now, when you've got that viewpoint and all you do is you walk on your toes into the water with a 20% weighting after breaking through 6,000, and then only take a third of that to buy at 6,800, I want people to understand that that is not an all-in call. That's not what I'm doing. What I'm doing is I'm attempting to establish a position that if it gets stronger and stronger, I will add to it, but with stops below it so that my risk is in control. That's a very different way of looking at the world.
Yeah, it was funny. You just mentioned how Bitcoin could be like the world currency. And I don't know how I ran into this. This was tweeted out like months ago, but I saw this on Twitter and almost never retweet people. By the way, the best way to make sure I don't retweet you is by sending me a DM asking me to retweet you. That's like the as crazy as that sounds, that's almost guaranteed not to get a retweet from me. But I almost never retweet, and uh, but this was really cool, and it's that historical chart of what the next currency is, and a lot of people thought this could have been the Chinese currency, but that's clearly not going to happen. So we really had no horse in the race after the U.S. dollar. But and I really like the timeline. 2030 is a reasonable year for things to change. And again, I'm a big fan of Martin Armstrong, and he's always talking about the year 2032 is like the big as the potential big collapse of the U.S. And he's always talked about 2032, and that seems very interesting if Bitcoin can just take over as that world reserve currency.
What a
Yeah,
great chart.
with Martin, yeah, it looks great. With Martin Armstrong, I'm a fan as well. What is he giving as the reason for 2032? I've
Well, it's
not
his
seen that projection.
no, it's his time site, it's his pi model, right? So
Oh,
uh,
it's a time cycle, right.
yeah,
It kind of
Martin.
makes sense. It kind of makes sense because if we talk about Bitcoin becoming an international standard, we have to then also imagine the world at that time. Why would it happen? What would lead into Bitcoin becoming so pervasive and so dominant and so useful? And in thinking about that, I don't want to talk too much, but it matches with some other things I've been researching. In that I don't know if many people are aware of this or if you're aware of this, but some of the biggest threats to civilization are geophysical, and Bitcoin is the only existing money, the only existing payment network, and the only existing currency that could uh, uh, survive and operate through extreme earth changes. And that matches many things I've been watching. And 2032, 2030, even 2025 was coming up in some of these scientific discussions about what are the risks to Earth and Earthlings. And how will Bitcoin become powerful? Not because governments allow it, but because there's no choice, right? There's no choice. When you have no choice and you need to transfer money or help somebody in an emergency, Bitcoin is going to be the one. And Blockstream is certainly helping us on that road by putting radio out there. Bitcoin on radio.
Yeah, no, I'm with you. I'm with you on those. I mean, we're definitely due for some major geological problems. We've been like dodging a bullet for a while. But yeah, this is his economic confidence model, and the prior one that I pulled up was actually back in the BC years and stuff. And here's how the dates line up. And one of those dates was in 1929, and that kind of reversed a lot of stuff. And the next one was at the beginning of 1980s when gold went through the roof. And his current these cycles last for a while. This is 30 years, but they're 56 years I think apart or something like that. And the next one is supposed to end. Technically, it's 2033, right? It's 95% of a year, so it's 0.95, which is 95% of a year. And yeah, and like this one ended with you know, the U.S. Revolution and the birth of capitalism, as he calls it. And yeah, so and he's had this for a long time. Like this isn't like, it's not like a gloom and doomer saying, "Oh, it's next year." No, 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 it's next year. No, no, it's
No.
next year. I mean,
Yeah.
I've seen I've seen I've seen Martin Armstrong's work from like the early 90s, and he had the same chart. Like this has not changed. Like it's been the same.
Yeah, and look at that final wave there up to
Right.
2033. It is just the bubble of all bubbles, isn't it? And driven by this kind of extreme euphoria and desperation. And I think that's why we're in a perpetual bull market in most instruments.
Yeah,
It's just going to go crazy, you know.
and he calls this like the difference between confidence in private sector and public sector, and and this would be the blow off top of the private sector, not the public sector. And the last time this happened was in 1929. This is where people start to lose confidence in the government, and they're causing the collapse of the government system, driving up the value of private assets, and then the private assets crash, and then everyone looks and begs the government to help. So this was this was the, you know, the raging 20s, and you know, the distrust in government after World War I, people getting their money. You know, the Fed came in, the Fed is doing some stuff, everyone is piling into the private sector, into the stock market, and then you get the big stock market crash, and then FTR and all the socialists get in there, right?
Yeah, yeah.
And kind of screw everything up for the next 70 years. And that's why the stagnation of the stock market all throughout this area. The blow off top was in commodities, where people ran into like gold and stuff. And now what we've been seeing, and this is why Martin Armstrong was very high on Trump. Trump is the end of this. This is the distrust in the government once again. This is how Trump gets elected. And this is how
Mm.
the Democrats, I think, are done. I don't think the Democrats are going to get elected, possibly for a little while. Maybe one or two will sneak in there because they're kind of, but the idea is, this is where this is why I'm so bullish on the stock market, because this is the reincarnation of what happened in the early 1920s, where where the government system is collapsing and people are piling into the stock market thinking that will save them. They will drive it through the roof. The value of the dollar can be driven through the roof. The value of the stocks could be driven through the roof. The value of the private assets, including Bitcoin, could be driven through the roof, because that's a private asset. It's not a public asset, it's a private asset. And then there'll be a giant crash, and then we'll see if the more socialism shows up, you know, after 2032. Maybe that's when China takes over. I don't know. Who
You know,
knows?
maybe, but is China socialist? You know, are they even communist?
It's
Irrespective of it.
they
Yeah,
seem to be very confused right now.
yeah.
Which
They're pursuing a capitalist path with no precedent for it, and I'm kind of a fence sitter when it comes to the term socialism, because like inflation, the definition of the word has changed. I'm a big socialist in the Marxist sense, you know, and looking at your chart, even back in, is it 1820s, when there was a deflationary crash, and that was a private sector crash, that von Mises and a lot of people talk about. Um, that was a collapse of faith in money and
right.
credit. That was the credit deflation. So what we're experiencing right now is so similar to that, you know, but it was many cycles before. And I'm just amazed, you know, at how many things are going up when there is no good reason for it to go up, because essentially people are buying into Bitcoin because they don't trust government. That's why they're doing it, and they want to become rich quickly, right?
Yeah, that chart is a wonderful chart, Tone.
It's
And
great. It's
what
great. I've never seen that. Yeah.
what's interesting about it is actually Nikolai Kondratyev's wave,
Right.
which he called the long wave. He wrote the book called The Long Wave back in the 1920s. And basically, he said there's a 52-year cycle. And if you take a look at the peaks, they come out to be around 50. It runs from 48 to about 54 years, but a 52-year cycle that he did not look at as public and private. I love the way that Martin Armstrong and Schumpeter, which this is really his chart, talk about the iteration between public and private. But what Nikolai Kondratyev was talking about is mainly worldwide sentiment having to do with not only the economy, but the military. And that's why Stalin had him thrown in prison after he wrote the book, because he's saying it's not political beliefs, it's human beliefs and human behavior that run through these cycles. And at almost all turning points, you've got massive wars taking place at various times. The 29 peak obviously was between World War I and World War II, and all the way back in 1774. That was an amazing period because for the first time, this little upstart bunch of colonists went against the most powerful country in the world and started a whole new type of thinking about thought and about democracy and individuals being able to make their own decisions. Very similar to what we're seeing, I believe, with Bitcoin today, that this little upstart experiment that runs counter to everything all around the world in terms of fiat and macroeconomics is presenting itself as a possible solution to things that people didn't even think were a problem, and now they're beginning to realize it is. So this is a fabulous chart.
Yeah, and Tyler, so this,
Great.
so each of these flips between private and public, they're about 52 years apart, 51, 52 years apart.
Exactly.
Now all of these are fractals. So within this current 52-year period, there are these 8-year periods, and that's what I use for Bitcoin, the 8-year period, which is the daily chart. So if we think of this as a weekly scale, the 8-year cycle is the daily scale, but we can also zoom this out because we can look at all of those periods as a 309 years. So currently, right? So this last public wave, we are actually in the middle of the public wave. So this is why 2032 is so critical, because not only is it the end of the 51-year period, it is also the end of the 309.6-year larger period. So, and the larger period is going to come to a peak of the public sector. So we're going to have a 309 year. So it's from here to here is 309 years. This chart starts in like the year 0 BC or something, right? Because he has the first private wave ending at 484, pretty much when Rome fell. And so this starts around year 100 something. So this would be the peak of the 309-year public wave at the same time as the peak of the 52-year private wave. So both the public sector and the private sector are likely to crash, which is different.
That's incredible.
Yeah.
Yeah.
And
yeah,
again,
that's what's really interesting is because the public, the general herd, calling for a dollar crash, and they're saying that the US debt is unsustainable without realizing that fiat was created in order for this debt to be sustainable. It can just be inflated and inflated. but our civilization psychology doesn't allow that. It will crash it intentionally. Tyler, I know you want to say something. Yeah.
Only that there is, I'm almost afraid to say it, but I will. There's a book that you probably can't find, but if you can find it, I was able to buy a copy on Amazon 20 years ago. It's called Magic is Real, M-A-G-I-C, Magic is Real. And it's written by one of my favorite technical analysts who's nobody's ever heard of, whose name was Walls, W-A-L-L-S. PQ. He didn't go by a first name. He went by P.Q. which stood for Philosopher's Quotient. And he was the seventh son of a seventh son of a seventh son. And he was also the head of research at Betcher and Company out of Denver, and came up with a theory called the dynamic web theory. Anyway, I followed him every day for 15 years. I paid him for 4 phone calls. It cost me $3.99 per phone call, 4 times a day for years and years and years, because he was so accurate using this system. And then he wrote this book, and it's really just a pamphlet, but it discusses everything that we are now talking about. Long before most people had come to these conclusions, I'd love to know when and where Martin Armstrong put this together. P.Q. Walls started talking about this back in the 1960s. The book is almost unreadable because he goes off into so many different avenues, but parts of it go into everything we're now saying. And he's got a wave that is 6 times larger than this wave that you're looking at, the 309-year wave. He's got 2,000-year waves going back throughout various points in ancient history. And he also is known for his own cycle, or his own wave, called the wall cycle. There's a thing called the kitchen cycle. The Kondratiev cycle is the longest in terms of an economic wave. These others are economic waves, but there are other things too. But then you've got shorter and shorter ones, one called the kitchen wave, Kitchen, and then also the wall cycle, WALL, named after PQ Wall. So anyway, I would just throw that in. Anybody that wants to get into this in detail, as you can see from what Tone has done, this stuff is discounted by mainstream economists. But when you see it and think about it, on that chart that you're looking at, the 6th wave, each of those little sawtooth, smaller cycles within each cycle is in itself a cycle. And
yeah, that's the 8 year. I mean, everything, they're all in 6 wave cycles.
Yeah.
And everything is like through 6. So these are about 8.25 years. And on Bitcoin, and I use this smaller cycle for Bitcoin because Bitcoin is only 10 years old. So I had to use the 8-year cycle, and I broke that down into parts. And the end of that cycle, I mean, that was the article that I wrote. I mean, that was the, if you Google intro to time, the original article that I wrote, intro to time, I have to put my name on it. I don't Google search that well yet. And this was the original article written in 2014 that used that 8-year cycle in order to present 2 key future dates. Future dates were a year and a half away in June of 2015, and then you can zoom into the actual day if you just I just estimated the month, and then the major event was to take place in August 2017, and the end result was this was the Greek banking crisis, and this was literally the segue getting in,
and the beginning of the run up to the peak.
Yeah. So
I mean, and you were saying that in 2014, right? When you and I were both writing articles for whoever. Yeah.
Like, I really like this stuff. I mean, treat every analysis with a grain of salt. especially things like this that can be seen as conspiracy theories. But I really enjoy it and I pay attention to it when I can.
Great, great. Can I ask you guys, in terms of cycles, you ever heard of the what they call the Yuga cycle? It comes from sort of Sanskrit Ayurvedic thinking, that there is a 12,000 year cycle, and it's broken down into, some people break it into 4,000 year cycles or 3,000 year cycles, but obviously 2,000 year cycles also fit in 12,000. It's a catastrophic cycle in terms of Earth changes, and we're 5 years out from a 12,000 year cycle ending. That becomes very mystical and arcane. But in terms of cycles, if we're going to call 300 year and 9 year cycles and 8 year cycles, and there seems to be a clock that ticks in our, maybe our galaxy or our solar system. Because even right now we're moving into a full moon and see the price start reacting, right?
I've never heard of it. I'm not familiar with it. I will. I mean, I had no intention of talking about cycles here. I do have to run soon. I do want to talk about the short-term stuff on Bitcoin. Also wanted to just talk to Tyler for another minute about the entry of a trade. So Tyler, you said Consensio is now bullish. Is that strictly based on the 30-week moving average turning up?
Yeah, I use only 3 moving averages. They're all simple moving averages. I never use exponential. And I use a 2, a 7, and a 30. And I use that for everything on a weekly basis. And when you use a 2, 7, and a 30, it's much more sensitive than these longer term moving averages. And obviously a 200-week moving average will give you much more information than shorter periods. But a 2, 7, and 30 is almost the same as a 14, a 50, and a 200. I changed that a 200-day. You just multiply it out. The 2 is equal on Bitcoin to 14 days, 2 weeks, 14 days. The 7 is 49 and 49 days, and the 30 is approximately 210. So it's very similar to using a 14, a 50, and a 200-day moving average, but I just like to keep it standard. When you put those on the Bitcoin chart, you will see that Consensio had you buying in way down at 4,000 and between 4,000 and 5,000 in increments. The way Consensio works is you don't go all in and all out. You take 13 basic steps to go from a bull market to a bear market or a bear market to a bull market. So what had happened against hyperwave was that as we started moving up through 4,000 and 5,000, the short and the intermediate term, meaning the 2 and the 7, had already turned up. We're well above the long term, and we're moving up very, very sharply. And because of that, and I've got my chart. If you can't pull it up on yours, I can.
Yeah, I don't know why this indicator is complaining.
Well, I think it's the triple. The triple, what goes into it makes it difficult to change some of the deals. If you want, I'll just pull up. It'll take me a second.
Yeah, I don't know what's going on. Like I can change this to a 2, and it doesn't like it. I think there is a minimum threshold here.
That could be.
7 works. So maybe 3 will work. So I can't give you the 3-day moving average. No, 3 doesn't work either. So maybe 4 is the minimum amount. Yeah, so there's a minimum. So the triple only works with the 4. I can only give you the 4, which is close to the 2-day. So I can kind of do it. So I can use the yeah. So I can use the 4, the 7, and the 30. So in that case, yes, they are all rising. They are all above each other. But on a weekly scale, for me, I still use the 7, the 30, and the what was I using? The 7, the 30, and the 50, I think. Oh
Exactly.
no, I'm sorry, I was using the 30, the 50, and the 200.
Right. Well,
And I
what you see on this chart now using those 3 moving averages is the intermediate and the short term began basing out down between 3,000 and 4,100. In other words, they flattened out because prices were flattening out. That's why I use such short moving averages. I want them to be canaries in a coal mine, that a actual shift is taking place between a bear market and a bull market. And you see them both moving up through your green 1, 2, 3, 4, 5, 6, 7, 8 off of sequential up to the 4,100 level. And then with that big 9, green 9 that broke through everything, the short term, the intermediate, and the long term, at that point, Consensio would have you 50%, 50% into this asset. I overrode that because I wanted to wait till the long term moved up. And that's the blue line that continued down all the way until your red 4 candle. When that turned up, that is the signal that you should be 100% in whatever the asset is. It doesn't matter if it's Bitcoin. So I use that on everything, tops and bottoms, for every asset. And that's why I made that decision at that point.
Nice. That's it correlates 100% to my moving average system, Tyler. It's only that we're using different period moving averages. Mine is more standard, I would say, but it actually correlates to what you're doing. Your system is quite clever, actually, because it's at a higher, it's showing you a higher time frame moving averages trends at lower time frames. I see what you're doing. Guys, what we're talking about is essentially correlated. We are all 3 of us during the session have justified our technical analysis, because we get asked to predict, and when you predict or you sit in the fence and don't predict, people will criticize you, and they do it harshly in the modern world. So we each 3 of us trying to justify our method, and I would add to it that Tone, your calls, you know, in terms of a green 2 moving above a green 1, that most often correlates to a 4-hour signal for me with moving averages. It's like clockwork. When you say that, I see the same thing. I'm like, it's a buy. You know, technical analysis is amazing. You know, whatever angle you come from, it works. And I agree with all 3 of you. This is a stupendous rally. I don't think it's finished yet. But when it does turn, I think we're going to be surprised by our moving averages or our indicator results, because it's going to be unprecedented. I'm not sucking that out of thin air. I just mean that price is going to swing wildly. We could very soon be back at 4,000.
Yeah. So real quick on Tyler, on your position, I'm gonna jump over to the daily chart. So you advised your clients to start buying Bitcoin basically once you lost your bet. Once the bet was lost at 6,500,
Yep.
that's when that was the area that you did not expect to break to the upside. And when it does, you expect it to keep going. So you suggested that if you have X amount of capital that you were planning to deploy into Bitcoin, you can put 20% of that into Bitcoin. However, don't put it all at once. You have buy points at 6,800, 6,500, and 6,200.
Correct. That's correct.
Right. So, and the only one that executed was 6,800 because you suggested this when Bitcoin was around 6,600.
Exactly.
So you wanted to just jump in, and if it pulls back, scale in on a pullback at lower prices.
That's exactly right.
And then your stop loss is below 6,000.
Right.
Right. And this is where people say Tone and Tyler always agree. We actually kind of don't, because I went I went bullish earlier, but I didn't. I mean, I don't have clients I recommend. I just give you my thoughts. I did not want to chase this. I personally will wait for the pullback. I don't know where that pullback is going to start. I don't know where that pullback is going to end, but I believe I would be able to go in that entire 20% or more at sub $6,000 price. And I personally am willing to risk and take that chance, but that's because I have a HODL position. Tyler doesn't. So here is the big difference. All of those people that did not have any Bitcoin during the big crash, this is why you guys are panicking if you still don't have any Bitcoin. But I did have Bitcoin, and people are now criticizing me for selling a HODL position. Correct, because I delayed, financing my life sub $6,000. This was not a good time for me to, pay my bills, pay my mortgage, and sell the Bitcoin to do it. This was a terrible time. This is a great time for me to, prepay the next 6 months of my bills, mostly because I think we're going to pull back. And if we pull back a lot, it's great. I just prepaid 6 months of my bills at a high price. I can also use some of that money and buy back in. But if we keep going up, I'm still going to be happy because I still have the majority of my HODL position.
Yeah, I mean, you, Tone, especially you and me, and I guess, Tyler, you're phasing into it. We're guys that live by Bitcoin. We get paid in Bitcoin. We talk Bitcoin the whole day. And then, when it comes to paying the bills, I've got to sell Bitcoin because that's what I earn, right? So exactly right. Now is a good time to take some of that Bitcoin and convert it to like fiat living expenses, right? Yeah, I'm the same.
And don't ever listen to people that say Tone did this and Tone did that. I have almost never seen anyone actually get it right. People are saying I went short at 3,000. Like, don't listen to people, okay? Don't ever listen to people. If either you watch it yourself, you pay attention yourself. You can't ask me. There's just too busy to do individual hand holding here. But yeah, so that's the reality of the situation. Those that were waiting to get in, look, I don't know what to tell you, right? Like, I am selling here because I was hodling a position. If you have no Bitcoin, Tyler's method is probably great. I saw what you did, and people don't understand. There's more than one TA tool. Hyperwave says 1,000, but if Consensio says it's time to buy back in and the bull market started, then the bull market has started. Like, if you think Tyler is going to wait till $30,000 to buy into Bitcoin, you're the crazy one, not Tyler.
Yeah, I would even add on Tyler's behalf that he's not saying that the bull market is started. He's simply saying that the indicators are bullish. So you are compelled, if you're going to follow your own method, you're compelled to buy. Even if it reverses now, you're not going to lose, right? You got some gains there, Tyler, on your method. Yeah.
Well, that's right. I made the comment last night.
Apologies to interrupt.
No, not at all. That's a great point. That's a great
point. Because I go on the 1 day chart, I turn bullish at 4,000, but your more conservative method is saying 6,000, right? So, or was it 6,600? That's good because uh, you got 8,500 2 days ago.
Yeah, I don't believe in coincidences, and it's very strange when they line up in a certain way. The 6,000 bottom that held for 5 months, when it finally was violated, it did it precisely at the phase two line of the hyperwave. And then coming back up, I set the bet at 6,500, not at 6,000, which is originally what the bet was supposed to be, because that would tell me if I lose that bet that we have gone through the 5,800 to 6,300 range that was overhead resistance fairly easily and fairly quickly, and therefore something big is happening. I didn't know when I made the bet that what would be happening is the long-term moving average would be turning up at precisely that point, giving a buy signal on Consensio. So,
Yeah.
you can say all of these things are coincidental. I also find it very interesting that at this point, Bitcoin is struggling right at the underside of the phase two line of the hyperwave, which comes in at about 8,500. It was 6,000 when it broke, but that phase two keeps moving up and is now at 8,500, and it's holding Bitcoin back. So all of these things are not coincidental. What the explanation is, why they work when they do work, nobody's ever explained. We all know how effective they can be, but we know that none of them are certain. What they do is they give you indications and probabilities, and then you have to overlay on top of that money management.
There you go.
Yeah,
That is the key.
which I plan to teach in an upcoming webinar this summer. All right, sorry guys, I do have to go. I am hosting a full day at the Russian sauna down on Wall Street. I need to get there. Yeah, come down if you're in the area. I'll be there all day. Maybe I'll sneak away for like an hour or two, but I'm planning to be there till they close, open to close. They actually just opened. I was going to be there around noon anyway. Come down, hang out, have some good food. Definitely plan to stay there a good 3 hours. You're going to pay $50 to get in there. So you don't want to just go in and out. So you want to enjoy the saunas, bring a bathing suit. They have some to borrow for men. Women probably definitely want to bring your own. It's co-ed, so it'll be a lot of fun. We'll be hanging out. I will see some of you there. I'm going to end screen share, and we'll say our goodbyes. Oh, I was going to mention one last thing. So I'm going to go back to screen share. And just very, very simple. The daily is on a 9 and the 12 hour is on a 9. I am looking for a 1 to 4 day correction. This correction could be severe and take us down to $6,000. This correction could be already over. The weekly chart is still telling me that I have a reasonable target between 9,000 and 9,400 Fibonacci line as the weekly comes into a 9. Now, I would love to see that. I would love to see a nice 9 doji or shooting star. Shooting star would be more difficult. I would love to see a nice 9 weekly doji just above 9,000. That would be awesome. That could be another good short trade for me on a swing trade as we correct down to the $4,000 to $5,000 area. And then I will reevaluate if the bear market is over, because I may be the last bear left. Now, is the bottom in? What's my percentage that the bottom is in? Probably 49. Probably I am still leaning 49 to 51 that sub $3,000 lows are coming. But I'm very close to flipping that, right? I just want to see how we top on this, what I consider an irrational rally. Okay, so that means if I am only 49% certain that the bottom is in, and I could be wrong on that. If I'm 49% certain that the bottom is in, I have a slightly higher chance that the bear market is not over, right? With the 49% probability that the bottom is not in, I'm looking at about a 40% that the bear market is still with us, and this is just a bear market rally, a bull trap, whatever you want to call it. Uh, uh, we'll see. We'll see how the price plays out. And there's nothing wrong with swing trading it long. That's what I've been telling my friends that were around me today, this week. And I'm like, no, you buy 7,400, buy 7,500. We're probably going to go to 9. But that doesn't mean that we still can't go back down. And from what I've seen in the current environment, it's still so many things make me nervous that it's bad. All right, guys. Unless you have very quick final thoughts, we're going to end it here. I'm going to pack up. I'm going to head over to the Wall Street bathhouse.
Great. Thanks a lot, Tone. That was a great show. Just real briefly, on May the 23rd, a week from today, next Thursday, we will do a webinar on another trading system called the Selgin trading system. It'll be 4 hours long. You can sign up on lucidinvestmentstrategies.com. Thank you very much.
Bye, guys. See you all on the next one. Check out tonebase.com, webinars, affiliate links, and all the rest. Bye, guys.